Okay, good day. Good day, I hope you're good. So yeah, this session is recorded. Okay, so you mentioned you want us to speak on support and resistance, and you wanted us to speak on how we trade VIX and how we trade boom and crash, like the strategy. So basically, to explain the boom and crash strategy, what I'm going to do is I'm going to actually speak about the support and resistance. And how we trade the boom and crash is basically how we trade the VIX. So it's more or less the same concept. The only thing you need to pay attention to on the different instruments or assets you trade is the patterns which they move with, or the patterns which the price leaves. Because each asset or each instrument has got its own movement. So before we explain or before we break it down, you can see price moved from the top side with a little pullback, push down again, we had a pullback, push down again. So when price pushes down, or when price moves in a certain direction for a long time, it leaves what is called a liquidity void. So from this last low level here, what you need to do is to mark it. So we expect price to pull back eventually to somewhere around these levels, which are on the 800 MA on the daily. Price has to cover this void left when the price was pushing down. So basically C5 or C1 rather, we are anticipating price to be in a bull run, possible bull run back to the 800. So there will be less spikes like for those selling C1. Okay, let me just okay, so that's a message for, I think I've got a person listening in who actually requested this lesson. So I'm just putting a message for them so that they dial in the audio so that they can hear me, because this is recorded over Zoom. Okay, so I'm just going to continue since this is recorded because of time. I'm just going to continue. All right, so we're saying price should cover this liquidity void. At the same time, what we need to look for is to check our daily chart. Okay, let me just remove these other markings. We need to check daily chart like for our directional bias short term, because long term we see we need to push up, but short term, what is the price doing? That's what we need to look at. Okay, so our price chart is looking like this. This is the daily. So you need to mark your charts first, like put your trend lines. So this trend line is based on what? It's based on this point here and this second point here. Then here we having the third point. There is a possibility, however, of price actually pushing down and wanting to come back to this level here, right here, before a possible continuation up. Like checking from the previous day, yesterday we had a bearish day. Today we are still bearish. So we need to check how today's candle closes before we actually decide whether to go short on this one or to take it long. So you want to mark your charts, you put your trend lines. So this already like filters some of the noise or some of the doubts you might have to take a certain trade. So long term, we long, short term, we have a possibility of a bearish move. Okay, I'm glad you can hear me. I am recording the session, so I'll send it to you soon as we finish. So remember, if you have a question, kindly just raise your hand, then I'll unmute you, or you can just quickly type in the question. So you mentioned you want to speak on support and resistance. You want to speak on how to trade VIX and the strategy on boom and crash. So I'm going to explain the strategy on boom and crash, but to explain it, I'm going to incorporate the support and resistance part which you wanted me to speak on. And I'm going to explain how we actually trade this, which is in a way how we trade everything we trade. So whatever I'm explaining here is the same concept we use in trading VIX or in trading currencies. So I'm just going to use this pair. I'll see with time, we might look at maybe a VIX index just to show you the similarities. So for now, you might want to do your multi-time frame analysis. That's the first thing. So you look at your chart on a bigger time frame. Let me just put my phone on mute. All right, so on our higher time frame, like I explained, if you just zoom in, you see that when price was pushing down, we had a huge push down. Price is pulling back. So when price pushes down in one direction like this, it leaves what is called a volatility void. So you need to mark the last level where price fell. You can put a horizontal line, or you can put any marking using your tools. So based on this, on the higher time frame, we see there's a possibility of this C1 actually pushing to the top side to these price areas, or to the 800 MA on the daily. But if you zoom in, you will see that on the daily, the pattern which we have, there's a possibility we might break, right? So I mentioned a break, possible retest, and a push back into this level here, or maybe into this level. We'll see like as price plays out, because this is the daily chart, remember. So the main concept of this, how like I explain it on a day trader's view. So we start from the daily, we get our buyers. So after you put your trend line based on these two levels, you want to go down one time frame. But before you go down, I'm just going to start to explain how we mark levels. So how we mark our levels here is we look at where price turned. For example, price turned here, it was coming down, but then it reversed, gave us this huge bullish engulfing. It gave us this high, which was higher than this one. So this makes this zone a valid zone. So if you have a valid zone, what you do is you come to your tools, then you mark from where the candlestick body ends or starts, or where the candlestick wick starts to where it ends, right? Like this, from here to here. Then you draw it into the future. Right. After you do this, you know that this is now your support zone. And so you've got support right here. Okay, let's just leave it at that. You got support thing. So when your price is now coming back in this zone, that's where you start to look for possible candles which show you that the price is now reversing. So for this, you need to be in your smaller time frames. So this is around the 1st of September. Let me just explain stage by stage so that you understand how this whole thing works. So after you have your support zone, what you do is you come to, let's go straight to M15 September 1. Okay, let's see if we can get there. Okay, so on your daily, once you see your price getting into that zone now, you need to be on your smaller time frame looking for patterns. So this is September 1, right? September 1, what you will notice is we were in a downtrend because price kept hugging the 50, hugging the 50, hugging the 50 and pushing down. This was September 1. So at this point in time, you might have wanted to put your trend line. So you need 2 points, then you put a trend line. Okay, they're not as accurate because I'm just trying to be a bit fast. Then wherever you see like 2 points which can help you to put a trend line, you do that. So there's another trend line. From there, price started to come up, right? So while we on that part as well, we want to put zones on the smaller time frame. So as the price was pushing down, you want to mark all your areas where you see your price turning. Something visible to the naked eye. You can see price actually turned here. Right there, price turned here, pushed down, turned here, pushed up, then turned here, pushed down. Wherever you see that turn, you can just apply your zone because you will use it in the future. Okay, so you're going to put your zone like this into the future as far as you can, right? Then the next zone, so you see that your price from there, it pushed down, then it stopped here, then came back up. Whilst you here, you see this reversal candlestick pattern on the moving average, right? So here you could have sold. But what I want to touch on for now is just zones. So you would have placed another zone, a minor zone. Right, on this level, you place your minor zone. So if it's a minor zone, you can just draw it for that particular day only, like just for this day until this period separator for the midnight. Right, so price then fell. So now you've got a zone based on this. This is now a resistance zone. It's a minor resistance zone. So when your price pulls back into the zone, you're looking for candles like these. So if I was on this chart on this particular day, I would have started to sell here, waiting for my price to close below the 13 EMA for a high probability sell. Then also watching my candles here, if they were going to break this level to signify that price might be coming back to this resistance zone. So if you check, price actually started pushing up a bit, but then these candles here showed me that this price was actually respecting this zone. So this resistance zone was respected for 3 times, and on the 4th time, price decided to fall. So when your price is falling, you want to look for the next zone where you take your profit, which was this one in this particular example. Right, so price left this zone when it pulled back up. So you mark that zone and you use it as you take profit. So if you're day trading, if you enter your trade right there, then let's say you enter a safety trade here after price closes below the 13. On this particular trade, you could have taken, that was about 40, 50 pips with the first positions. So the thing with boom and crash, the strategy we use, you always make sure you have multiple positions running. So on average, we can say you should have 3 positions. So when you get your price showing you reversals, you open 1 position, you open 1 more position on confirmation. Then when you get a possible pullback within that movement range, you can add a 3rd position. So this allows you to actually close maybe 1 position here, or to scale out and leave 1 position running. Then the price pulls back, you'll be trailing your profits. It rejects a moving average and continues down to take profit. So if this price had decided to come back up, you would have closed your 2nd position with a small loss, but you could have taken profit on the 1st trade, which means this trade was still a positive trade. So that's why we always advise multiple positions, at least 3 if you can, depending with your account size. Okay, so this was this day. Remember, we are anticipating, we're looking for rejection candles to show us that we are now buying based on our analysis on the daily chart. So right here, you could have, okay, after price reversed here, this is a minor zone. So minor zones are usually violated most of the times. So you see they get broken easily, they don't stand. So you can draw them or you cannot draw them. But if you want, I think you should actually draw them, because they do work like for areas of interest where you'll be looking for certain price action. So you can incorporate your minor zones, or you can just use zones from the higher time frames for higher probabilities. Okay, so as your price was coming down, it was in a channel, right? So a channel is just when your price is creating lower highs and lower lows. So we put this into the future. Okay, so I want you to notice this pattern here. We had the first touch, second touch. We didn't get a third touch here. However, price did a second touch and a third touch. Then on the 4th touch, there was no follow through to the downside. These are some of the things you actually need to be looking at, because remember, this is the 15-minute time frame. So if you're day trading, you want to see how your candles are actually painting. As much as you might have wanted price to come up to the zone for a third touch, certain candlesticks like this RR pattern on the 50 show you that you are actually going to go short instead of going to go long. So that's the advantage of knowing your candlesticks. If you're only using zones or like channels and anticipate your price to come here, sometimes or most of the times it actually doesn't get there, because everybody who's trading is looking at this zone. So there was obviously a lot of buys on this area. There were many people buying, right? But if you know your candles, if you know your moving averages, which we use on BTMM, then it becomes a bit easier to actually follow what your price is doing. As much as you wanted to buy, only these 2 candlesticks showed you that this price was going to go the other way. So you could have easily sold here, stop loss is tight, then your profit target now would have been based on this trend line and on this level here. So I remember I also mentioned we should speak on risk management. Let me touch on that as well quickly. What risk management simply entitles is that if you're selling here, stop loss is tight on the previous high, which is right here. So you want to make sure that the trade you're taking is going to offer you 2 times the risk or more, right? 2 times the risk or more. So by risking this one part here, you were saying that you are actually targeting this as TP1, which was actually this first low here, or the first support zone. Then from there, you can see price broke aggressively. So if you had your 3 entries, the first entry would have hit TP with a 1:2 risk to reward ratio. The second trade would have hit TP2, which was now on the 4th touch of the trend line, which is now an almost 1:4 risk to reward ratio trade. Then if you are trailing the last position, you would have taken a 1:5 risk to reward ratio trade. So what this simply means is if you are risking $1, you want to make 2, just to make it easy. So you are risking $1 to make 2, so 1:2. Or you get a 1:4 trade whereby you risked $1, but in 10 you made $4. So by having a trade with a higher risk to reward ratio, this allows you to have 3 losses. 3 losses, you lose $3. But on one good trade, you get what? $4. So this means on the 4 trades you took, you were wrong 3 times, you were correct once, but you still end your day in net positive. So you end with +1, which is why we always try to say, let's cut our losses early and let our winners run. So basically, it's just making sure that when you take a trade, you're taking a high probability trade with a minimal stop loss value and a higher take profit target, higher than what you are risking, so that you can be wrong many times, then right a few times, but still be profitable. Right, so I hope that was clear. So remember, on the higher time frame, we're looking for bullish patterns. So as this price was coming down, we had a fake out here. This price broke out of this trend line, but came back inside. Right now, we're looking for patterns. We're looking for divergence, if there is any. On this particular setup, there was nothing clear. But the only clue which showed us that this was a legit reversal is price was now trading above the yellow baseline. Price actually broke out of the volatility bands and it broke out at this point. This here, if you are buying C1, so now with our team, we only sell the crash and we only buy the boom. So I'm going to show you buy setups here because I say this strategy applies on everything we trade. So even if you want to buy the crash, this will be a valid buy because now your indicator is confirming this breakout as a bullish move. So where would you take your profit? You would actually look to take your profits first on this 200 MA, second on this zone, and third on this 800 MA, which is also on this zone. So this is TP3, 2, 1. But wait a minute, before we take this trade, what are we risking? Okay, so TDI has confirmed a buy here, which is somewhere there. The previous low is this one. That's where your stop loss is, right? All right, SL. Your take profit one is right here. So you can already see you are risking this much to make 1, 2, 3. So this is a 1:3 risk to reward ratio, which is a trade which is worth taking. By the time this trade hits TP2, it's already a 1:5. By the time it hits TP3, it's already a 1:6. You understand? So on 3 positions now, you were risking a total of 1, 2, 3 to make 3, 5, 6, which is what, 14. So you can already check what you were risking and what you made. It will take you what, about 4 losses, or actually 5 losses, to end up in a negative. So after being profitable with such a setup, it's one setup in a day. We actually, if you're day trading, we say you're done for the day, especially for this particular trade, because if we are to check from entry to TP1, 50 pips, TP2, 90 pips, TP3, 120 pips. So in one day, you've taken 50 plus 90, which is already what, 140 plus 120, which makes it a total of 240 points on one setup, or 240 pips. So if you get such a setup in a day for day trading, it's quite good. And these are the type of setups which can also grow your account fast, because the setup was a higher reward compared to the risk. So if you check now, our price became bullish. While it's incorporating the zones now, you can check from this zone in a higher time frame, price rejected it. It faked out, rejected, pulled back in for a retest and started pushing up. So I'm just going to put another trend line from this bottom zone into the future. So I hope in terms of trend lines, it's clear. So we have first touch, second touch, right? So waiting for a third touch, possible fourth or fifth. So if you check, your price came to retest a huge support area on a higher time frame, and on a smaller time frame, it was retesting the trend line. As soon as you get your TDI showing you that there is volatility to the top side, you can safely open your buy, stop loss below the previous level, right? Take profits on the next level, which was still this one, or on the 800s. So you can use your MAs as you take profits as well. So you were risking this much in order to get like almost 2.5. Then the price pulled back, retested the 50. Price action will tell you that it's a retest. TDI shows you a W. It's trading above the level 50, so we bullish. Trading above the 50 EMA, ID50 setup, we're still bullish. So I think on what I've explained, do you have any questions so far? Because if you apply all this I'm telling you right now, that's the way to go. It's what we use on everything we trade. We apply it, V75, V100, step index, jump indices, boom and crash, currencies, your indices. We use the same thing. So is there any question for now? I'm going to go back to explain zones just now. I just wanted to show you this setup on a smaller time frame. If there's no questions, then I'll simply proceed. So you will see where I had marked. This is where the price started reversing. From a higher time frame, this was the view we had. Those two candlesticks at the bottom signify a reversal. No questions for now. Okay, perfect. So I'm going to continue with the zones. So I explained our setup on the first zone on a higher time frame and how we use it on a smaller time frame. That is multi-time frame analysis. So we're talking about this zone here. Okay, so I'm going to draw all the zones now on this time frame to our current price. Okay, we have this zone here. I want to explain something of great importance here. So the same way we mark our daily chart is the same way you mark your 4-hour chart. Same way you mark your H1, M15, M5, M1. No matter which chart you want to mark, it's the same concept. The only thing you need to know is your higher time frame is stronger than the smaller time frames. So for example, let's say from this buy, we noticed that price came back into this resistance area. So once our price gets in here, we start looking for reversal patterns or reversal candles, which show us that the price wants to push back down. Okay, so if you notice on this particular daily candles, this one was the first candle to show us that there is a slowdown in the buying momentum. So on the next day, we would have looked to sell any candle which showed us we were selling here. We could have sold C1, right? We were only looking to sell. No buy was valid here. This was a trap buy. As you can see, price pushed all the way up, then fell in the same day, right? So that was a trap buy. So after seeing these two candlesticks, if you see price break out, most of the times it's a fake out. So you should be actually on the eye for a sell. So for us who trade C1, we were eyeing any intraday reversal on this candle for us to actually sell and hold this price as it fell. So on after this day now, next day is usually 70%, 75% of the times, it's usually a selling day because these three candles were rejecting a resistance zone. So from there, you can check your price fell. On this day, it actually fell almost to the support. Then it pushed up and closed this day in green. So let me explain candlesticks while we're still there. Candlesticks like these ones. Okay, this is a hammer candlestick. These are some of the patterns you need to look at when you trade your assets, right? Like if you see these candles, what is happening most of the time? When you see such a candle, what happens most of the time? So most of the time it happens, there's a push up. Most of the time it happens, there's a push up. Most of the time it happens, there's a push up. But where exactly is it happening? Is it on a zone or is it on a moving average? Those are some of the things you also need to look at. So this happened on a zone, this happened on a moving average, this happened on a zone and a moving average, this happened on a moving average, and this one is slightly above the moving average, and it's also on this resistance zone. So here there will be a lot of trapping which is going to happen here. But if we get a nice bullish candle here, we are going to continue going up as we anticipated. Then if price decides to break below, we'll see what happens or what type of candlesticks are there for us to take this instrument short, right? So I hope that explanation was clear. On an uptrend, you can see we've had a reversal here. We're now trading above the 50 level and the 50 baseline. So we are bullish. If you get a bullish candle, higher probability next day you're buying. Get a bullish candle on the daily, higher probability you're buying. So it's the reverse if you're selling. So each asset also represents certain patterns. So already know C1, if we look at the daily, these are the candles we need to look for a bullish move. These are the candles we need to look for. So you look for the candles on a daily time frame, then you look for your patterns on a smaller time frame or for your early entries on your smaller time frames. So let's just check. I just want to see if I can pinpoint the bearish move candles. So on C1, you can see on a bearish move, you need bearish engulfing candle, bearish engulfing candle. This is a reversal pattern. It's almost like the RR candlestick patterns. There is an RR candlestick pattern. Any move which shows you price going up after an RR candlestick, it's a trap move. Most of the times, it's a trap move. After an RR candlestick, especially on rejecting a zone or a moving average, the price will go the other way, right? Price was coming up, you get an RR, that's a clean reversal. Coming up, you get an RR here. Price pushes down one day, then starts to push up. This is a zone, remember, marked from the previous, these two previous candles. Then you get another RR, high probability sell. If you check now, this became a long-term sell. You only TP'd on the 800, and that was after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of trading. So that shows you how strong that pattern is, especially on a high time frame. So you can see also that before the daily falls after that pattern, you get an M. You get an M, and there is RR candlesticks in the fake move up, then the dealer falls. RR candles, fake move up, then the dealer falls. RR candles, fake move up, then another RR, and the dealer fell. RR candlestick, fake move up. This was a total fake out because this was an entire zone which was broken. But the next candle came and closed below the zone and gave an RR candle. So it's fine to have small losses, but make sure when the big move comes, you still have your capital and you can maximize on that big move. So always make sure you cut your losses while they're still small, so that you can be able to catch the big move when it comes. So this is like an overview of the higher time frame. So I'm going to go back now to H4. So H4, personally for me, it looks like these guys want to break low. They are going to push this price to the low side. Why I'm saying that is because of the pattern I'm seeing. We've had this level here, right? Oh, bless me. Okay, we have this level which is being held. Fake out price came back below, fake out price came back below. Now what I'm seeing is TDI is trading below the 50. This is what's giving me that selling bias that they might actually break this and come back to the 200, which is based on the zone. But remember, at the same time, this is also a zone, right? Excuse me, this is also a zone. So there's too many zones in there, which means if there's too many zones, there will be a lot of traps, right? There will be a lot of trapping. Those are the things you need to look at. So remember, we are on the H4 time frame. So let me just put the zones which I can see without crowding the chart. Okay, I've got this major zone here. Why I'm calling this a major zone is because from this low, the price pushed up a bit without retesting. So there is a huge chance we might get our price wanting to come into that zone and breaking these minor zones here. These are the minor zones. Or it might come to this zone because this one is a bit major. So, and push back up maybe for a retest and the continuation into this zone. That's a possibility. But at this point in time, in the next 17 minutes, I want to see how this H4 candle will close. So this is a rejection of the 50 and the 13. Remember, TDI is trading below the 50, and this is a higher time frame. So my chances are there's a higher probability that C1 will actually fall probably to this level. So what I'll actually do is, let me go to H1, because I trade this almost on a daily. Okay, so if you check, okay, I had a minor zone in here. This is today's trading, by the way. I had a minor zone in here. Then I saw this rejection. I was actually in a sell from about this area, and I took profit here on this TP. So price pulled back up into this zone, which is looking like a possible retest of this break. So I'm looking to go short. But at the same time, okay, you see price is actually falling. So at the same time, I'm highly thinking they will break. So if I confirm with M15, because I want to have a smaller risk on this trade if I'm taking it. So I'll come to M15. Just want to check my pattern. Shows me that this will actually close like this. It will sell. So I will open a position here. Then I will show you where I will put my stop loss and where I will put my TP. Okay, so my stop loss, I'm going to put it right above the last high, which is slightly inside the zone. So I'll just put it right there. Right, so on this particular trade, let's just check how many pips I'm risking. I'm risking about 25 pips, right? So I should target 50 pips. That's take profit number one. So I'm going to show you how you do it. So for the higher time frame, your 50 pip from the entry would be, let me just zoom in. From the entry, 50 pips will be right, I'm actually on the dot, right? That's 52. So my take profits, let me just change the color. My take profit would be on the pink line right here. That will be my take profits. I would have gained 2 portions of the one part which I was risking. So based on what we are anticipating, this is a probability of the setup actually playing out. So if you check, the trade is like maybe 1/4 of the way to TP, right? If you look at your TDI, this is the 1 hour time frame. You've got 2 shark fins on the 50, which makes this a high probability trade. So I will open a second position. So one other thing, if you're scaling in, my first position was with 2 lots. If you scale in, always make sure you use a smaller lot size. Each time you scale in, use a smaller lot size. So now the take profit for this will be on the 800. So the 800 is also in this zone here. So I'm sure you can see this previous zone here, minor zone. That's where my 800 is. So that will be my TP2. They're a bit close to each other. Then after that, we might see somewhere in here, we might get a pullback. If we get a pullback, then I'll be looking to put my third position, and my TP will just be on this TP2. So I'm going to send you this trade or the results of how it played out a bit later in the day, or after it hits TP or stop loss or whatever may happen. So the thing is, I also want to look at my candles at because price can hit this zone and start to reverse for no reason. So I will want to look at my previous price action, what happened on those reversals, because as you can see on C1, the reversals happen from the blue, right? I'm looking at these candles. So if I get a similar pattern, it means I exit the trade. You understand? I'll simply exit the trade. So the first position is almost halfway to TP2. So for now, the part I was risking, probably I've gained back that part if I was to close this trade right now. But I'll simply leave it and let it run, because we risked one part. We want to make these two parts. Right, so we're gonna leave that one and let it run whilst we continue with the lesson. So basically the concept is the same. On all time frames, just make sure you have your major zones on a higher time frame, minor zones on your smaller time frame. So as you can see now, price has hit the minor zone hits, minor zone hits. Possibly it's coming to this zone, then it's gonna stall a little bit or pull back before breaking it. So minor zones are easily broken, but major zones usually repel the price. So we'll be looking for this push down to actually get to somewhere here before we see a considerable pullback. And there's also a possibility it might get into this zone as well. So boom and crash, as you can see, that's my strategy. This is how I trade every time. But the only difference is when I'm trading, there's something called a trading edge, which each trader has to develop. A trading edge is when you see a certain setup play out, and that setup rings a bell, like it once played out a couple of times and you caught it. On such setups, I go in with big lot sizes. That's a trading edge. It's something which you need to develop by yourself. So once you develop it, on some trades, for example, on this one, when you catch it in the zone here, you might find out you go in with a bigger lot size. When you achieve 50 pips, you close the big lot size, then you leave your small lot sizes running. So that's like a way of trying to grow an account faster. But it only comes about when you get more confident, number one, and when you stop being scared, number two. Because as long as you're scared, your trading edge won't develop. You need to stop being scared so that your trading edge can start developing. I think that's about it. So this is the booming crash strategy, which is the same way we trade literally everything. So I think I'll do another lesson, maybe when I explain, maybe let's say V100 or maybe V10 1S. I'll just see which one I pick, or you can tell me which one you want me to look at, so we can do that on the second lesson. But what you can do right now is you can open another asset. Open, let's say, step index. When you open your step index, you want to come to the daily chart. Let me quickly show you what you do if you open a chart. You want to open your, okay, let's look for step index. You open your step index. It depends whether you're using the BTMM template or not. If you're using a clean chart, it's the same concept. Nothing has changed. For example, if I am to mark this chart right now, what I want to look for is this low point, this high point. This is a zone. This zone was broken here. Price came and hit this zone and left this zone as it was going up. So you want to look at these points which you easily see without struggling much. So when you get these points now, you mark them. Okay, this was the H1, but you can start doing this on the daily chart so that you can get a bias of where you're going. So for example, here you can see price is currently in a zone. That's why you see it's pulling back. Okay, this is the daily chart. There's also a zone here. There's also a zone here. There's also a zone, right? There's also a zone. This is also a zone. Then you want to check if you can get a trend line, maybe from this point to touch this point, to kind of show you like your possible next 10. So you put your trend line. So this already shows you that there is a possibility if this price breaks here, is definitely coming here for the third touch, right? But if it reverses here, there's a possibility it's now coming back into this zone for a possible head and shoulder pattern, right? So these are the things you just need to look at. Like in hindsight, before you even take a trade, you can see we haven't even marked this chart properly, but you have a clue of what your price can do. So what you do after you do this, you open your chart, open the daily, mark your zones of interest like this. Then you go to the H4. You do the same thing. You add more trend lines. Wherever you see zones where you can put like a trend line, do that, put your trend line. This setup might actually play out like this. You see here where I've put this trend line here. This price might be coming for a retest of either this zone or the trend line before pushing up. That's a very high probability right now on step index. So I haven't really properly marked the chart, but I already have a clue of what this price might do. So you go to H4, you do the same thing. You go to H1, you do the same thing. You go to M15, then wait for your price to give you an entry. That's basically what you need to do on anything you trade. So I hope today's session was helpful. I'm not sure if you have any lessons, any questions. Sorry, hey, saying lessons. Any questions? So you can see here, price is also any channel. So let me just put my templates. Okay, price is any channel. So if I'm to trade this now, I'll just wait for price to either break out of the channel to the top side or break out of the channel to the bottom side. That's what I'll do. So I don't know if you have any questions. So remember, this is the M15 view now. So you want to catch the move as it starts happening on M15, then hold it out as it plays out on a higher time frame. So do you have any questions? If not, I think I'll end today's session now because I just want to do something real quick. Then we can plan to have another session whereby I can explain any of the VIX, you can just choose anyone which you want me to look at, from V10 1S to V75. You can just pick one, then I'll look at it on the next lesson. But for today, I think that's it. So wherever you see zones, you just draw the zones. So you know that if you're in a channel, if you're selling from here, you look to take profit on the zone. The basics of zones is you want to see the reaction of price on the zone. You want to see the reaction of price on the zones. So if you're on a smaller time frame and you see your price breaking and coming back up and breaking and coming back up, you simply go to one higher time frame above that one and you see the clearer view. So for example, on this particular one, remember, on smaller time frames, it's minor zones which can easily be broken. So if I'm trading step index and I come to the charts and my price is approaching this zone, I'll be looking for reversal candlesticks for a sell and momentum candlesticks or continuation patterns for a continuation buy. Same thing if the price comes to the bottom one. I'm looking for reversal candlesticks for a buy and I'm looking for continuation patterns for a sell. So for now, price is caught up. If price is caught up in a channel like this one, it's best to be out of the markets and wait for a breakout like what I mentioned. But for this same setup right now, if you are to go to a higher time frame, let's say H1. Okay. On H1 now, you see that now this price, if it breaks here, it's actually coming to this zone here. Okay, see this zone right there. So there is a possibility from this break we are coming into this zone. So when we get in this zone, we look for reversal candlesticks on the particular time frame, number one, or on a smaller time frame for early entries. Zones only help you to know where to start looking for your entries. Don't look for entries inside here. Don't look for entries inside here. Look for entries on the zone, on the zone, on the zone, on the zone. This is also a zone here. Look for entries on the zone. And what you will see most of the times is your zones, they somehow align with your moving averages most of the times. So you can expect price to actually come and respect this zone. That will mean it's also respecting this moving average. Same with this zone and this moving average. So if a zone falls in line with the moving average, it makes it a high probability zone. So in the zone, that's where you start looking for your doji, your bullish engulfings, your hammer. If you do not get any of those, it means there's a higher possibility your price will just break the zone and continue going the other way. And on a zone, for example, it's not, do not be like, what do I say? Do not have one bias. Let's say, like right now, we're saying maybe price might come here and sell. Do not have a selling bias, because this price can just start pushing back up, right, and go long and become a buy. So what you're looking for is clean price action or clean candlesticks on the zone, which show you that, okay, this price is actually going this way, or this price is actually going that way. This whole zone here, there's no clear price action here. So step index, if I was trading it right now, I wouldn't even look at it. I'll start looking at it tomorrow. After tomorrow, maybe we have clean candles. A clean move is like this one. You have clean candles. If it's a reversal candle, it's a reversal. If it's a bullish engulfing, it's a bullish. If it's a bullish momentum, it's bullish. This is actually basically a pullback from this long momentum move. So at this point in time, there is no setup for me. I'll just wait for price to possibly come into this zone. So when it comes into this zone now, I'm looking to take it on a continuation long. Or if it breaks, I'm looking to take it short back into the zone. So when you trade, always know it's usually zone to zone. When you are trading, it's usually zone to zone. So I hope you answered. Is there any other question? Okay, there's our C1. It's almost on TP, still like halfway, but almost. This was our first position, it's halfway, this is our TP. So as you can see, that's how I trade. Mainly, I only trade C5 and C1. If you check, there's no other synthetics on the bottom of my chart. This is my live chart. This is my everyday account. So I mainly focus on C5 and C1. So it's also good if you focus on maybe only one or two things. If you check indices, I only have US 30 here. Currencies, I think this was for a lesson. I don't trade this currency, USD, CHF. I don't trade this. I think it was for just a lesson. This step, I ended it just now. So focus on one or two things that will make sure that you know the patterns. You know how it moves, you know when it moves, or you know what to anticipate before your certain asset moves. So I'm not sure if you have any other question. If not, then this session was recorded. So I'm going to send it to you just now to your Telegram. Then we can plan on the next one-on-one lesson as well. You just let me know and check my schedule and we can do it. Is there any other question? If there is no other question, thank you so much for your time. Just pick another asset, do your multi-time frame analysis, take screenshots and send it to me. Then I'll also look at it, then I'll correct you where you are wrong. So you can pick any assets, analyze it daily, H4, H1, M15, mark your zones, then send it to me. Then I'll do the same thing on mine. If there's anything which needs to be corrected, then I will show you. But as you can see, C1 is moving our way. What I will expect though is a pullback. At some point, there has to be a pullback and a continuation. All right, so thank you so much for your time. Have a good day.